Well, the rupee has been sliding for some time. It's lost 8% of its value this year. But today it breached the 70 mark against the US dollar for the very first time ever. What does a weaker rupee actually mean for you and me? Well, it means that oil imports, which India depends a lot on, will get more expensive. And higher oil prices in turn mean that vegetables will become more expensive because transportation costs will go up. It also means education and holidays in foreign countries becomes more expensive, as do computers, smartphones and cars that are imported from abroad. All of that becomes more expensive. The silver lining, however, is actually for Indian exports. Now, Finance Ministry officials say that the falling rupee is a global phenomenon, it's a temporary one, and that the currency will stabilize. However, the opposition led by the Congress has used this day today to remind the Prime Minister and the BJP of how they attacked the then Prime Minister Dr. Manmohan Singh when the rupee fell back in 2013. At that time, Mr. Modi had said that corrupt politics in Delhi was to blame for the weakening of the rupee.
दिल्ली की सरकार जवाब नहीं दे रही है। देश जानना चाहता है प्रधानमंत्री ऐसा क्या कारण है कि आज अकेला हिंदुस्तान का रुपया डॉलर के मुकाबले गिरता ही चला गया और क्यों चला गया। और मैंने साफ मांग की है, ये सिर्फ आर्थिक कारणों से नहीं हुआ है, ये आपकी भ्रष्ट राजनीति जो चली है दिल्ली से, उसका इसके अंदर बहुत बड़ा रोल है। बहुत गंभीरता से आरोप लगा रहा है।
Well, this is what Mr. Modi had said back in 2013, and that's why this became such an ugly political story today. And perhaps the reasons for the rupee weakening are something that need to be looked at outside the prism of just politics. We have Rajat Sethi, advisor to the Manipur Chief Minister, joining us this evening, and also senior economist Professor Arun Kumar with us as well. But Vivek Dahija, let me take this to you first. If, as I said, we need to look at this beyond the sort of prism of party politics and the blame game that's been going on from both sides. Why has this happened to the rupee? I've seen many economists also argue today that this was bound to happen, that this is not necessarily a bad thing given the current inflation rates, etc. And therefore, is this political finger pointing on both sides in a sense, irrelevant?
Well, Nidhi, you will recall that we had almost exactly the same conversation exactly 5 years ago on this show. And the truth is that the politics is one, and this is the Congress's schadenfreude moment. They can point to Mr. Modi saying that the rupee is in the ICU or is now on the way to the morgue or whatever he said, and say, oh, well, now how do you explain what's happened here? So now that he's in government and not in opposition, he's taking a very different, much more nuanced view of the value of the rupee. So we leave the politics aside, which is really simply a game of claiming credit or assigning blame. As a matter of economics, what is happening now is not that different from what happened 5 years ago. 5 years ago, there was the so-called taper crisis. The US Fed was tapering its QE program, and that sent shockwaves through the emerging markets. People pulled their money out, brought it back to the US, a safe haven. The dollar is the safe haven in time of a crisis. And the same thing is happening now. Let's not forget that this was triggered by the Turkish crisis, the lira crisis, the US and Turkey at loggerheads. The Turkish lira has been at all-time lows. Many emerging market currencies are at or near all-time lows. So this is really not an India story. This is a story of global emerging markets and the fact that we simply have no real anchor in the global monetary system. Now that's a whole different debate. So the fact is, and on the question that you raised, it's quite fair to argue that the rupee might have been overvalued anyway. If it comes down a bit, that's fine. Yes, imports get more expensive, our travel abroad becomes more expensive, but it gives some breathing room to our exporters, at least temporarily. So I think that this is being blown out of all proportion, which is exactly what I told you 5 years ago. So it's wrong to blame Dr. Singh and wrong to blame this government. This is a global phenomenon, Nidhi.
I think that's very well put by Vivek Dahija there. And therefore, Rajat Sethi, can I ask you that is the problem today when we have this discussion on the rupee? Because as Vivek points out, it's not the government's fault. It wasn't then, it isn't now. But is the problem today that we've got so caught up in political rhetoric on both sides? And if I look at the comments the Prime Minister made in 2013 at that time, he said there's a competition between the Congress and the rupee on who will fall lower. When we got freedom, it was 1 rupee equal to $1. See how prices are falling. The rupee is in the ICU, etc., etc. In a sense, national pride was also equated with the strength of the rupee. So is that a trap that today the government here, this current government has fallen into because of the political rhetoric of the past?
Yeah. Just to quickly correct what Dahija ji was trying to compare the 2013 and 2018 scenarios, he squarely says that this were purely extraneous factors in both the years which led to the downfall of the rupee. So let me correct him there. Currency movements per se are not problematic. What is problematic is the overall macroeconomic picture. If you look at 2013's macroeconomic picture, you will clearly figure out that there were several problems other than the tapering, the QE tapering that was happening pushed by the Fed, the US Fed. You see the twin deficits at that time. You look at the CAD, the current account deficit that we were looking at was mighty high. The inflation numbers were very high. We were looking at around 10% inflation. And if you look at the overall scenario, the economic fundamentals during that time when the UPA was drawing down to a close were very, very bad. Now we're coming in 2018. If you see, why are economists generally not very worried about this thing, and the Sensex is a clear one indication of that, is that the macros remain intact. There is nothing which is wrong with the macroeconomic picture, other than, I mean, of course, we can all debate that we could have expected a double-digit growth, which is not there. These are fair criticisms, but this movement on the currency, which has been triggered by the lira's, completely falling prices of lira, and this is primarily has had a pushback on the emerging economies. It's as simple as that. But you need to differentiate.
Your points are important. Rajat
I-
Sethi, the
I would
point.
like-
I'm sorry, Vivek. Just give me a second. Rajat, the point is that when politically, it was the strength of the rupee was equated with the strength of the nation when the BJP was in opposition. I'm asking you a political question. Do you think in hindsight that was a mistake? Because then, we tend to sort of, these debates end up becoming these silly binaries, political binaries, where, the reality is more complex.
See, ideally, if it remains a pure economic question, then I certainly am with you that all economics should be away from the day-to-day political bickering out of it. But you need to understand and rewind and go back to what was happening in 2013. There was a complete policy paralysis then, and the entire economy was on a tailspin.
Okay, so you're making a distinction between the macroeconomic
malgovernance, which is a political issue. There,
okay, Vivek has a point, and then I'll come to Pavan. Yeah. Vivek Dahija, go ahead.
No, I do want to respond. I mean, Mr. Sethi is not speaking as a completely dispassionate, impartial observer here. I'm not sure where he learned his economics, but as my great guru Bob Mundell, the Nobel laureate and the inventor of the Godfather of the Euro, pointed out, the basic problem here is the absence of a global monetary system. And so, yes, the macroeconomy was somewhat fragile 5 years ago. It's not in particularly brilliant shape now. It's not as bad as it was. But this is a global phenomenon. And if really the problem is policy paralysis, why are all emerging market currencies going down? Is Mr. Modi or was Dr. Singh to blame for what was happening in South Africa?
No, it's not policy paralysis
Brazil?
Right now, Vivek.
That's absurd.
It's the policy paralysis
let's remove the politics.
That I mentioned.
Let us remove the politics.
Let's remove the politics. Let me tell you that you are also not unbiased.
May I be allowed to finish, Mr. Sethi? May I be allowed, Mr. Sethi, may I be allowed to finish?
Because you also interrupted, sir.
If we're talking economics and we remove the politics, no credible person, I did not interrupt you. Are you finished? And I'm speaking. No credible economist will say that the 2013 rupee problem, rupee fall, was principally an India problem. It was principally a problem of the taper crisis, the taper talk tantrum. Ask any credible economist. And any credible economist today will say the same thing. So I am being totally consistent. Neither can we blame Dr. Singh's government nor Mr. Modi's government.
Okay, so let me get Professor Arun Kumar and
Pavan. Talk real economics, not voodoo economics.
Okay, not voodoo economics. Pavan Khera, to you first.
No, I am strictly talking from a political point of view. I remember I was in Gujarat just before the Lok Sabha elections of 2014, and the slogan which caught my attention, every lamppost you had a poster, "Bahut hui dollar ki maar ab ki baar Modi sarkar," and people really bought that. Now, when you just go back 4 years, in the last 4 years, Nidhi, demonetization destroyed your MSME sector. The GST, the faulty implementation of GST, destroyed further the MSME sector. Your current account deficit hasn't really recovered ever since. Asia's weakest currency is the rupee today. We ask you a political question. How weak is this leadership? Not just weak. I wish it was just a weak leadership. The policies are absolutely faulty, anti-people. How do you now justify the rising prices of fuel? Compare the international prices. Now you have a justification. You will say, look, the dollar is so expensive, therefore our import bills, oil bills are very high. That will have a ripple effect on overall economy. So what are you doing? So let's talk politics, let's talk economics also. Your faulty policies are responsible. In 2008, Nidhi, there was a major global meltdown. It was thanks to Dr. Manmohan Singh's absolutely fabulous economic policies that India stayed afloat. We didn't sink, Rupee didn't sink. What's happening today? I ask you now.
Okay, so let me, before I get Rajat to respond to that, Professor Arun Kumar, where do you stand on this? I mean, how much of this is global? How much of this do you think is anything to do with domestic policy? And what do you think will happen to the rupee now, Professor Kumar?
Okay, so you know, there are both factors, external and internal, that are important. Let's understand, for the fixation of the exchange rate, you have, of course, the macro parameters which look pretty good at this point of time, but you also have expectations, and it's expectations that have changed dramatically. You know, not only with Turkey, what's happening to the lira, but you know, you've seen what's happening vis-a-vis Brexit, you've seen what's happening vis-a-vis the trade war with China, with others, what's happening vis-a-vis Russia and, you know, Iran. So there's a huge deal of uncertainty that's going on in the international market, which is pegging things down. Second point is that the US economy is doing better, so the dollar has risen. But there are internal factors. For instance, because of GST, the tax collection is a bit less than what was expected, so the fiscal deficit may rise. The current account deficit is under pressure. Investments are not rising. NPAs are in trouble. And if there is a promise of an early election, that's going to create huge uncertainty. So the uncertainty is gone in internally. The uncertainty externally is very high. And that is why you see these huge changes where people are shifting away from other currencies to the dollar. So in a sense, we have to look at both the internal and the external factors. One important thing that happens when expectation changes, that exporters don't bring their proceeds back and the importers start importing more, and therefore the balance of payment gets disturbed further, and that therefore makes the rupee depreciate further, and that has happened earlier when expectations have changed. So at this point, expectations are very important, and there the internal factors are also playing a very important role.
No, so do you actually expect that the rupee will slide further before it recovers? What do you predict?
So my feeling is that the expectations, given the uncertainty, the expectations will continue to be as uncertain as they are, probably increase the uncertainty depending on what the US does, and therefore in a sense the slide could continue for a little longer.
Rajat Sethi, I think the big concern people have though is what impact this is going to have on all of us in terms of just, you know, if you have more expensive fuel bills when you're importing fuel, it has a knock-off effect on everything else. So are we actually going to see things become a little more difficult for people in the short term?
Well, Nidhi, if you look at the inflation numbers, they have been at a 20-year low. And I believe that this entire impact on the currency is temporary. This was on expected lines. If you would have followed the Niti Aayog chairman's viewpoint, he gave a statement wherein he believes that based on the real rates, they were expecting the currency to be overvalued by 5 to 7% actually. So the markets were actually expecting this to happen. And we all believe that once there is more stability on the global markets, things will settle down, and the overall impact mainly on inflation would not be that much. There will be correspondingly better boosts to make in India, there will be boosts to exports, and probably there will be a better impact on the jobs as well. So overall, for the past several years, the exports haven't had their best run, and we all agree with that. And I think this small cushion that is being given to exporters, and with the right smart policies, this will help us in the medium and the short and the medium term.
Vivek Dahija, what would the impact be on all of us in your view?
Well, again, you know, the macro picture is that a weakening rupee is good for exporters, but bad for those of us who buy imported goods. But on balance, again, let's look at the fact that the rupee most likely was overvalued. In other words, it was stronger than it should be. So some correction was inevitable. The trigger again is the lira crisis, is the is the U.S.-Turkey spat. So I think we as consumers often take a very narrow view of it. Our foreign vacations will become more expensive. Buying your new iPhone becomes more expensive. But exporters do get some breathing room. Now, it doesn't solve the problem that low productivity is the real hurdle for them. But that's a kind of a silver lining. So on balance, I'm not particularly worried. I think the markets tend to take care of themselves. It may sound prosaic, but demand and supply will sort itself out in the foreign exchange market as it does in other markets. But yes, for those of us who do rely on imported products, travel and so forth, you will see the cost of those things going up for sure for a while.
All right. Well, thank you to all of you for giving us some perspective on why the rupee is falling. There are different points of view on that, as there always are. But perhaps things in the end won't be as bad as perhaps many of us think they could have been. But thank you. We'll see you again tomorrow night. The Prime Minister will be speaking at the Red Fort in the morning. We will be analysing his major announcements tomorrow night. See you then.